You guys have been with me as I've been talking about building this, and it's really, really exciting to see like just all of the different puzzle pieces coming together. So I apologize that I'm not, tuning in at 6, and I appreciate anyone who comes out here at 4 because I know it's a little bit of a shakeup in terms of times. So if you are new to coming to any of these lives, go ahead and just uh, give me a shout out here in the chat section. Let me know where you're at in the home buying process, also where you're at in the country. Super fun to, to get to know you guys a little bit better on this end too. All right. So let's start off with just like what's going on in the marketplace, what you might be seeing in headlines. Well, it's been, I think, a rocky road for interest rates the last couple of weeks, just because we all know that the government is going to start tapering their asset purchases come November. And we've seen a lot of, play out with the unemployment numbers, inflation. And so we've seen like, rates go up, then they go down slightly, then go up, and then go down slightly. And so interest rates just in general, we've seen a bump anywhere between an eighth to a quarter of a percent. And so that is definitely notable to people's purchasing powers. So you just want to note that every $1,000 roughly impacts a payment, $5 or $6 depending on your loan type. And a bump in interest rates can actually, cost somebody anywhere between like $30 to $50,000 in purchasing power because of how much it impacts somebody's payment. So just keep in mind that if you are on the fence, rising interest rates will definitely impact how much you qualify for. For those of you who didn't tune in last week, the conforming loan limits are going to be coming out at the end of November. A lot of lenders changed their conventional guidelines and are now in loan amounts for a conventional loan anywhere between $625,000 and $650,000, which is a positive sign and will relieve some issues in terms of affordability for people who can income qualify but maybe don't have, a 10 to 20% down payment that is required by jumbo financing. Along those notes, guys, if you're an FHA buyer, though, it looks like FHA loans will be somewhere in the 400,000s, right? So that's pretty good sign just all the way around. And then as far as like just mortgage information, we are definitely starting to see a reduction in applications. Mortgage applications are down, I think, somewhere around like 12%, I think is what I read. If you factor in all the cash buyers, though, it's probably close to 6 to 7%. And then refinance applications have also declined. And that's just because interest rates are increasing. So nothing that I think is like out of whack. Other things to remember is that inventory has been down 13% nationwide, and the value of homes have increased in some areas upwards of like, over 20 to 30%. So I mean, houses are just less affordable. Again, though, even with all that information, like I said, there's still a huge amount of demand. So a lot more people that need to purchase homes, that want to purchase homes than the actual number of homes available. So we are still in a seller's market, unfortunately. And yeah, so that's what I've got for just your mortgage update. Let me know if you guys have any questions. Okay, so I want to shout out a couple people. We got Millennial Money on here, MS Shadow, Miguel Rivera, Jen, and we got my girl Danielle. Woohoo! And then we got Karen, Franco. Okay, so we're going to be answering your guys' questions, and I also got some questions emailed into me. Millennial Money says, is spending 28% gross on mortgage payments too much in a high cost area? We're debt free and don't want kids. Again, like I said, so I always try to do things based off my net take home income. And if all of your bills can be paid with your net take home income and you're only spending about 70%, I think you're way in line to purchase regardless of the area that you're in. And it sounds like you have minimal discretionary debt. So I think this is a really good sign. And so if you feel like you can afford it, you can still afford to save, you can still afford to, invest in your retirement, then I give you the thumbs up on that. All right. So Shadow Llama says, when does it make sense to recast? Can it allow you to get out of PMI? Absolutely. So I have a lot of clients who, instead of selling their homes before they purchase a new one, will go with lower down payments, anywhere between 5 and 10%, and then decide that after their home sells, they're going to put down what's called a principal reduction payment and then re-amortize or recast their loan payments out as if they always had that large down payment. If you are putting down, in total between your original down payment and the new principal reduction, if you have 20% equity, you can also request a mortgage insurance termination if you have a conventional loan. If you're on FHA, unfortunately, the only way to get out of MI is to refinance, but it is a really great way to alter your payments without having to do a costly refinance. All right. Let's see here. Okay, I make 30,000, have a 720 credit score, 10,000 down payment, 4 years at my job, no debt. I want to buy something for 139,000. Can I qualify for that FHA? I mean, based on those parameters, um I mean, I don't have a mortgage calculator with me, but I will say that off the top of my head, it does sound like you would be able to qualify for that. Um, Alrighty. And then we got Yanni here. Yanni, guys, is a brand new loan officer on my team. I love her to death. She's literally only been in the office for 3 days, but literally she's a light in the office, and everyone has told me how much they love her. So thank you for joining us. Also, guys, Karen is also on my team, another amazing human being that I love to death. And Rihanna. So we got a lot of team members, which is super fun. So thank you guys for supporting me. Oh, and then we got our regulars, Rod and Laura here from Grand Rapids. Um, so bummed I could not see you, but I'm so excited to meet you one of these days. And I hope that you'll be out in Arizona. I know you guys are looking to move out here, but you know, we'll have to make that happen sooner or later. Alrighty, guys. All right, so I'm going to start off. Go ahead and post your questions here. I'm going to start off with some of the questions. And I apologize, I was not very good at getting the questions answered from last week. So if you did email them in, I apologize. I'm going to do my best to catch up now. Okay. All right. So Jennifer Smith asks, reaching out to you from the state of Illinois. I was looking over my closing cost documents, and like you said in your video, the APR interest rate is going to be different from your interest rate you acquire. And that brings me to 2,000 and more. I wanted to know, would it be okay to pay my closing costs upfront, and would that eliminate that $2,000 and interest? So the thing with APRs, guys, is that APRs are just including the non-reoccurring costs in addition to your interest. So no matter what, let's say there are no closing costs. If you're paying mortgage insurance or interest, your APR is going to be, slightly higher than your actual interest rate. And so you just have to be aware of that going into it. Even if you prepay your costs up front on a purchase transaction, that's what you do anyway. You still have a different APR because there are costs of getting the loan. So you just want to be aware of that. People often get confused with APRs and interest rates. And it is just something that when you're shopping, like if you see an excessively higher APR than another lender and the terms are the same, it means that the costs are different. And all that's telling you is to go ahead and look closer at your fee estimate and figure out where the differences are. Like a lot of times, and also when you're shopping, the bigger things that you want to pay attention to are the origination points on a fee estimate and any discount points and lender credits, the title fees, taxes, insurance, and interest, right? So long as you're paying the same amount of interest, are going to be the same regardless of the lender if all the terms are the same, right? If the transaction is the same. So the things you're really focusing on are origination charges, discount points, lender credits. All right. Okay. So we got Trevor here. Hey, Trevs says, at what point can I request my mortgage insurance on a conventional loan to be removed without refinancing? So I get this question quite a bit, and basically, for it depends on the mortgage insurance that the company has selected for you. But the majority of them are if you have 25% equity in the property. And you've owned it for 2 years and had that loan for 2 years, you can request that they order an appraisal and then request that the mortgage insurance be terminated. Now, the lender is going to be doing the appraisal, and they don't always get like a proper inspection. Sometimes they just hire a real estate agent to do what's called broker price, a BPO, a broker price opinion. There we go. And so if your home has a ton of upgrades, if you've done a lot of improvements, if you have, made renovations that you think bring up the home value, you really want to provide that with your lender in addition to just requesting the appraisal. So you want to give them as much information to be able to establish that value as possible. Okay. Alrighty. So let's go in here. All right. Let's see. Okay. Mm, all right. So sorry, some of these questions can kind of get political or negative, and so I hate to skip them, but I also like want to keep this upbeat. Okay, so Kelly says, "Hey Lizzie, love your channel. I'm curious about Biden's first-time homebuyer aid. Is this something we can use yet? If not, do you know when it'll be available?" So unfortunately, I have not seen any information on this. It was a hot topic news item at the beginning of the year, and I know that there are proposals made for first-time generation buyers, and then also a potential tax credit for first time home buyers, but nothing has been made official yet. And a lot of times with legislation, it does take a couple years before anything gets rolled out, just because there's a lot of different adjustments and amendments. And sometimes, additional policies become more priority. So unfortunately nothing has been talked about in kind of some months now, but if I do hear anything, I promise you I will be making a video. All right. So Planty Root says, "Hey Lizzie, how do you know when you're ready to buy a home? I keep hearing if you are ready, but I'm not sure I am. Thanks." So Planty Roots, I think that that's really, really great question. What I always like to tell people is that you have to live on a budget. And if your budget allows for you to have a lifestyle that you enjoy off of 70%, and you can live off that, put money in for retirement, also put, money away for savings, then you're in a good position to look at home ownership. You never want home ownership to come at the expense of not being able to get out of debt and not being able to save for your future. And so those are my big requirements. You know, if buying a home today means that you're going to be in debt forever, don't do it. I talked to somebody about 2 years ago, and they were like literally tens of thousands of dollars in debt. They had like more than $1,500 in minimum monthly payments. And I, recommended that that person, use 20% of their income to pay down debt and 10% of their debt of their income to go towards savings. And 3 years down the line, they're now able to be homeowners, right? They've paid off not all of their debt, but a big chunk of it. And now they make more income, and they're way better potential buyers now than they would have been strapped for income and not able to have any savings 3 years ago. So that's how you really know. All right. So can you talk a bit about, on average, about rate locks and how much on average a 45, 60-day rate lock costs? Yeah. So typically rates are locked in for 30 days. And depending on the interest rate that you choose, your interest rate will come with a credit or it will come with a cost. There are like, an eighth additional cost to extend to 45 days and then a quarter typically for 60 days. Every bank is going to be different. And so you want to account for those expenses, you know what I mean, in your close of escrow, right? Because depending on your loan amount, right, a quarter of a percent can be a couple thousand, it can be a couple hundred, but it definitely adds to the cost of your loan. So you'll definitely want to pay attention to that. And there's some places that are a lot more expensive than that. And there's other places that allow for like, I think some new builds were doing like 6-month locks. Those things are very, very expensive. Okay, so you definitely want it. Sometimes it's honestly cheaper for you to wait and float the market if you're paying attention. All right. So, wow, you've upgraded to live streams. Awesome work. Keep it coming, Lizzie. You're the best. Well, thank you, Juan. I've been doing live streams now for, I feel like a year, right? A year? A long time. So I'm glad you think it's an upgrade. Appreciate you. All right. Ben N says, "Hi, Lizzie. While in escrow, is it a bad idea to hold or to have items on hold with your credit card? They ping my card, but they do not charge it. I hope it makes sense." Um, oh my goodness, guys. Can we give a shout out to Arthur Ramirez? He is a potential home buyer right now. I'm like super pumped. I just everyone could give him some like kudos and some thumbs up for encouragement. It's a tough housing market out there. I appreciate you, honey. Thank you for the super chat. Um, all right, so let's see. Let's go back. Oh, so yes, you can make holds on your credit card. It shouldn't have an impact. If you're using your credit card like normal, you're totally fine in a transaction. If you spend over the limit, Don't make the credit card payment, max it out. There is a chance that we'll get alerted to that because it has an impact to your score. And so it is something that you'll want to pay attention to. So just make sure that you keep your spending consistent with what you normally do on a regular basis. Do not open up new credit accounts. Now, something that recently came up though for me on a home loan, and it could come up for you, is now you know that Affirm program where people are putting things on layaway where it says you can buy this for 4 easy payments using Affirm. So that doesn't necessarily get tacked onto your credit report, but those payments do come out of your bank statements. And I recently had an underwriter request an account statement to verify that no credit was actually opened. And it's the first time that's happened to me. And I do think that it is something that we will see more of in the future. Just an FYI. Woo! And then we have Christian Andrews. Thank you so much for the super chat. Says, first time on a live stream, currently under contract in New Jersey, just waiting on the appraisal and the inspection. Oh my goodness, congratulations. That is super awesome. I'm so pumped for you, and I'm so honored that you made it to my live today. So thank you. Thank you. Let me know if you have any questions, though. I'd love to help you with this. Okay. Thank you, Danielle. I love you. And then I have some other team members. We got Tony Ann and Kristen and Trevor. Thank you guys so much for joining us. You guys rock. All right. So then we got Eric who says, do you recommend using an online mortgage broker or local? Ooh, so I got asked this question today, actually. And so here's my recommendation. I think that online banks are definitely going to give you the cheapest option when it comes to your home loan. And this is my honest opinion. But here's the thing, in a purchase transaction, lots of things matter, and timing is one of them, communication is one of them, using state forms is one of them, being available on the weekends and the evenings is important, and having somebody reputable that the seller recognizes is important to getting your offers accepted. And those typically do not come with online banking because, I mean, the higher quality the loan officer, I mean, honestly, the more expensive, right? And we see this in lots of different industries. So I know that, like, for instance, like my team is not the cheapest game in town, but I will also tell you that we'll make sure that your transaction closes. And I mean, because our team has such a good reputation, a lot of our clients actually get their offers accepted. And so that stuff matters during your home loan process. But let's say you're going with a refinance, right? I mean, if you're looking at just rate alone, I mean, sometimes those online bankers are like they're just cheaper. I mean, honestly. But I have heard lots of horror stories that it like takes like 9 weeks, 6 months to get a home loan done. And in those times, people are having to pay for rate lock extensions and have additional fees. And just the overall frustration can sometimes be there. So I mean, you get what you pay for essentially. But I definitely do see, cost benefits with online bankers. But yeah, I mean, it really just depends on your situation, how complex your deal is, how long you have for a close of escrow, if it's a purchase, whether the seller will accept that or not. So sometimes I do think that, if it's your first purchase, it's worth going with a local reputable bank, that people trust. Yikes. Sorry for that. Okay. So Jordan Davidson says, hey, Lizzie, I'm thinking that I should buy a home that needs some work. My hope is to buy a home and do a cash out refinance to redo the home. Is there a better way to do this? Actually, Jordan, yes and no. It really just depends on the deal. If you're buying a house that needs some work, especially right now as we're starting to see things slow down, you may actually be able to purchase with a renovation loan. And those loans typically take a little bit longer to qualify for. It depends on how much, renovations you plan on doing. But if it's simple stuff, I mean, we're talking about 45 to 60-day close of escrow, which in some areas is pretty standard. But if you can get that accepted, you can actually finance in the repairs to your purchase transaction. And oftentimes that is a lot cheaper than doing a cash out refinance later. So, I mean, definitely look into that. Worst case scenario, yes, after 6 months, you can do a cash out refinance. Just realize you're going to be probably paying a slightly higher interest rate to do cash out. So there's that. Ooh, and then we got Brianna. Brianna's also on my team. So much love for my team today. Thank you guys. Appreciate you. Okay, it's Daniel says, hi, Lizzie. What impact does a $400 monthly car payment have on qualifying for a home loan? So I don't know your personal financials, but like I said, for every $1,000, it impacts a payment $5. So if you're adding $400 worth of debt, divide that into, $5. What is that? Like $80,000 of purchasing power potentially. It's kind of a big deal, truthfully. So, you just wanna make sure that it's worth it. So if you're in the market to purchase that property, guys, you wanna really try hard not to finance anything, and trust me, I understand that life happens, like, we have people who get into car accidents or, their car got stolen or their lease is up, and this is just what happened during their home loan. But it does make things so much more complicated, can drop your credit, obviously reduce your purchasing power. So you really have to make sure that it's worth it. Um, all right. So Yomar says, how long after refi is someone typically able to sell? Well, you're able to sell right away. Now, your loan officer probably won't love it because we typically have to pay our commissions back if you guys sell or refinance before 6 payments are made. So, ideally, if you're going to do a refinance, my personal rule is that you're saving $200 and going to be in the property at least 4 years because you want to break even on the additional expenses that you're financing into the loan. And so if it's not gonna be worth it, right? If we're not really gonna, really be saving some money, um, I wouldn't recommend refinancing because life happens. And like you're asking me this question, I imagine it's because now you're thinking of selling, maybe buying something else, moving in with someone else, so I just hate when people waste money. All right. So AW says, Lizzie, what are some of the pros and cons of a new build? I found some in the low 200s in West Phoenix. Ooh, that is so awesome, AW. Um, so here are the pros. I think that you can buy a new property. Typically, everything's new, so you don't really have any maintenance issues for a while unless you get a not so great builder. Some of the cons, though, are that one, it takes a long time, especially in a market like the one today, where labor costs and material costs are kind of out of control and very unreliable. So there's that. And typically you live in the outskirts of town. So you're going to be buying further away from things. You're going to be spending more in gas and, just potentially increasing your commute time. Commute times, though, aren't really bad in Arizona. We have really great grid system, really great traffic. So, I mean, in comparison to other places, obviously. So, aside from that, I really don't think. Oh, wait, actually, I do think. Um, New builds don't have the same kind of built-in appreciation that a resale home does, and typically you're going to be paying premium prices plus interest on all the upgrades that you do. So it used to be in a time where not like today, where you'd buy your new build home, and depending on how that builder would close out the rest of their sales, sometimes your home would actually be worth less in the short run than when you purchased it. Obviously, now you're starting the contract price at one price, and then the market's appreciating and appreciating and appreciating, and most people buying new home sales in this market are walking into equity. But in the past, right, it used to take you like 2 to 3 years to really start building equity because of the costs of all the improvements. So that is one thing to consider in this market. I don't really think it's a concern. All right. So let's see. So we got Christian Andrews who says, so my wife and I scheduled an inspection and an appraisal on the same day. Would that affect the appraiser's report? Oh my God, yes, especially if you have an inspector. So it depends on the inspector that you get and the appraiser that you get. But typically, I wouldn't have them meet because you never want the inspector to be telling you that there's something wrong with the property and have the appraiser overhear it. Sometimes those things are minimal, but if an appraiser knows that there's an issue, they have to call it out in the appraisal report. And that can add some additional conditions to your home loan that maybe you were not expecting. And a lot of those things can actually be taken care of outside of the loan during the repair process, which is why there is a thing called a BINSR, which is that buyer inspection. mm, I don't know. I'll have to double check what BINSR is. If I have any realtors on there, it would be awesome if you posted what that is. But it's like buyer inspection, seller response, or something like that. So anyway, so when you get that information, like we don't necessarily as the lender need to know every single repair that needs to be done. So putting your appraiser in a position where they're going to have to itemize anything that could be wrong with your property will definitely add to that appraisal report and probably cause some issues. So I probably wouldn't have them there at the same time, truthfully. Okay. All right. So Jordan Davidson says, "Thank you. What are some quick and efficient ways to raise my credit score?" Ooh, so I like that Experian Boost. I think that really helps. That's where you add your utilities on to your credit bureau. It only works with Experian, but honestly, it helps. And then things are paying down your credit cards to 30% of whatever their limit is. Obviously, making sure that you're on time with all your payments. Trying to settle for deletion on any medical debts that you may have in terms of collections. So all of those things are really quick and fairly easy. Sometimes costly though, depending on what you owe, um, to make happen. But they're the quickest ways I see people boost their credit. All right. So Allison says, lots of prospective home buyers on here. I hope to be ready to take my originator exam for Texas in December. Any tips on the math portion? I don't hate math, but it's my final roadblock. Allison, it's like basic addition and division. You'll be fine. It's basic math. Like how to calculate a debt to income ratio or a loan to value is literally like just division and multiplication. So you're going to be totally fine. So no worries about the math portion. All right. So Yomar says, "Thank you. Removed PMI and saved $220, a total of $500 savings per month." Everyone give her a clap. And girlfriend, why are you wanting to sell your house? You just saved $500. Um, Okay, are you seeing fire insurance premiums increase in your area? If so, would this impact someone's potential to buy? So in Arizona, I know that there's certain areas that are prone to fires, but I don't think that we have, I mean, at least where I'm at, we don't typically have issues with fire insurance. But obviously those premiums would have to be included in your debt ratio. We have to include flood insurance here, believe it or not. Arizona, because of the mountains and because of just like, some of the ways that we drain here, there are some certain areas that are actually considered in a flood zone. And so we do have to account for that in our debt to income ratios. But I have had people have significant issues getting qualified for financing if they can't get fire insurance. So if it's a high likelihood that the house will burn down, I've seen lots of carriers deny it. And if it can't be insured, unfortunately, we can't finance it. So that is just something to be aware of in addition to the debt to income ratio. Let's see. So Jordan says, "Thank you. Do you have any input on how to find a decent realtor?" Oh my God, I could go on for days about this. So, yes. So typically, I think that in this marketplace, it's a buyer's due diligence to interview their real estate agent because it's so much harder now to get an offer accepted that you really want to make sure that you're working with someone who knows what they're doing and has a good network of agents that they can develop relationships on or use their relationships on to help you get an offer accepted. So things that I would ask are just in general, like what their success rate is with current buyers, what their current buyer strategy is. Does it include, a contingency for appraisal gaps? How long they've run comparables, how long they've been in the business, what they've seen with appraisal disputes. These are all really good questions. If they do not have answers to these, it's a pretty good sign that they're not super seasoned. And I'm not saying that you can't work with an inexperienced agent. I mean, you just want to make sure that you're working with someone who's going to be really aggressive and know like what steps to take so that you're not overpaying, but that you're also getting your offers accepted. So I hope that helps. If you're looking in Phoenix and need a good recommendation, I promise you we work with the best. Okay, so AW says, "Hi, Lizzie. If a house appraises higher than the purchase price, how does that factor into the PMI as a loan to value portion increases?" So, unfortunately, all of your loan terms are set on your purchase price or the appraised value, whatever is less. Okay, so if the home appraises for less, unfortunately, that's what we gear all the loan terms on. But if it appraises higher, unfortunately, it's the sales price because that is less. So, it'll just factor into, the 2-year time period for how long you keep the property if you're trying to figure out when to get the PMI removed. So, or unless you decide to refinance. Okay, so Racimi says, "Hi, Lizzie, watching you from my new home." Oh my God, you got into the house. You guys, give this guy a total thumbs up and bunch of claps. I don't know if you're a he or a she, so sorry. Racimi struggled so much in this home buying process. He had to go to multiple lenders to get qualified because of a debt to income ratio and because of a crappy pre qualification in the first place. But I am so stoked to see that you found a house. I'm so happy that you closed this. This is like one of the reasons I like to do these lives is because I actually feel like we're helping people. And so I am so pumped for you, girl. Like, so super pumped. That is so awesome. That made my whole day. Yay. Alrighty, guys, let's get some more questions in here. Oh, I love it. I love you guys encouraging them. That's so awesome. I hope to see you for my new home one day. Still, hey, there's nothing wrong with being in your mom's basement so long as you're saving money, reducing debt, and putting yourself in a better position to purchase. You know, like um if that had even been an option for me, I would have loved to have done that before I bought my first home. So, there's no shame in your game. Okay. Let's see. Thank you. Is there a way to look up realtors' successes, how many houses they've sold, etc.? You know, there is nothing that is transparent to, uh, unfortunately, there's nothing that's transparent to the consumer, but you can generally get a good sense of how long they've been in real estate if you look them up and read the reviews about them. If it's an agent that doesn't have any reviews on them, that's a pretty good sign. And they should have reviews on a variety of different sites. Like if you guys were to Google me, we have reviews on Yelp, we have views on Google, we have I think I have like 200 reviews on you know, a previous mortgage company's like website. I mean, we have there's a lot of reviews about us online. And so you can tell that we've had a lot of customers and their recent reviews too. So that's like a really good way. The other thing is you can always ask your loan officer. So we have the ability to look up everyone's transactions because there's a bunch of reports on that. And so if you are looking for a good recommendation, also talk to your lender because they can definitely give you some insider information. Okay. So let's see. All right, let's get some more questions in here. I'm gonna go back to the emailed ones. Okay. Um, Okay. Hey there, tuning in from Peoria, Arizona. Ooh, good job, Mike. Could you tell me how leasing solar panels could affect my home selling process? I hear it's a good investment on one hand, and yet on the other hand, I'm told it causes more headaches than it's worth. Well, so here's the deal. Um, there's a million reasons why people like solar. The main one that I hear is that it reduces the cost of an electricity bill. And in Phoenix, sometimes that can be a couple $100s. One of the things, though, that I always am just like mind boggled about is how much they cost in relation to how much you're actually saving on a monthly basis. And I rarely see that they compute that way, but there's a lot of people who are raving fans of them, and maybe I personally just don't know enough about them. But when it comes to buying a home that has solar panels, typically you have to include that in the debt ratio. And because it is technically a lien against the property, that property lien has to be released before your new mortgage can close. And sometimes that process can delay your close of escrow. So it can be it can create more hassles. And then in addition to, not everyone wants to purchase a property where leased equipment is attached to it. It's like owning a cell phone for the next 30 years. You know what I mean? People don't always want to have that. And so those are some of the complications. But I have literally so many clients who literally love, love, love their solar panels. So there's got to be something to them. But yes, it will add an additional layer to your home buying process. All right. So any info on interest rates changing in early 2022? So interest rates are already changing, Abe. So just so you know, anytime you hear that inflation is increasing, expect interest rates to go up. Anytime you hear them say that employment is not an issue, that the employment numbers are reducing, which, oh, by the way, guys, those numbers should be coming out tomorrow and the next day. Anytime you hear that the economy is getting better, expect interest rates to go up. Most experts, though, are saying that it'll probably go up like somewhere in the high threes, low fours, which shouldn't impact affordability that much. What is impacting affordability, though, is the rapid increasing of appreciation. And so, we're also starting to see a slowdown in that, which is really good, especially because we're going to see higher interest rates. So, hopefully, nothing too catastrophic, guys. For those of you who are really praying for a housing crash, I still don't see it on the horizon. I know I've been saying this for like the last year and a half. But again, I think it's like a simple math problem. Home values won't go down until there's literally more houses available than the people who want them. Okay. So AW says, how fast can you refi after having instant equity in a new build? Want to get rid of the PMI ASAP. Also, how much does it cost to refinance? So typically, once you purchase, you'll at least want to wait 6 months. And that's just to allow for enough time to refinance so that you grow enough equity. Most people, it takes anywhere between 2 and 3 years to have enough equity to remove their private mortgage insurance. And then in that case, I always tell them to try to go the route of just asking the servicer to remove it versus refining. Refinances generally cost anywhere between $2,000 to $3,000. And you don't typically pay that up front. You actually finance that into the home loan. So James says, "Hi Lizzie, what's the best way to figure out if a neighborhood is going to appreciate more than others? Is there a website for this?" Unfortunately, there is not a website for this, but you can ask your real estate agents to do a comparative market analysis of the different neighborhoods, and you can generally see a trend and a percentage of appreciation for each neighborhood. And they typically do that via zip code, just so you know. It's Daniel says, "Wow, good detail on solar panels that I didn't know I needed." Well, thank you. I'm glad that I could help inform you guys about solar panels. Too funny. Hey guys, if you guys are enjoying this live stream, I just realized I didn't ask you guys to go and like this. It would mean a lot to me if you guys did. It helps boost the ratings of the channel and gets more exposure to the live. And that would really mean a lot to me. So please do that. Okay, so Mary Smith says, can lenders provide a quote without submitting a formal loan application and doing a credit check? Zillow said they couldn't provide a written quote unless we applied and pulled credit. Is that right? So, yes, I mean, it's so hard to give a quote when we don't have all of the ingredients that we need to give you an accurate answer. It's just like it's like hoping. I generally give people a range and then give them what our costs are. But if they want an actual formal quote from me, I'm going to have to run the credit. I'm going to have to see their financials because if I'm going to commit to something, I want to make sure that I'm committing to the right thing. So you can always get information, but I would have to agree, unfortunately, with Zillow on this one. So, okay. Oh, thank you, Danielle. You were freaking awesome, girl. Thank you. And thank you guys. Woo, we just bumped up 10 people. Thank you so much. Okay, so Kate Jones says, is there any way we can cancel new construction? You can always cancel a transaction, guys, just so you know, new construction or resale. The thing is that you may not get your earnest money back, which is always, people want to cancel a transaction and not have any penalty. Unfortunately, in a resale transaction, if you get denied, you can get your earnest money back typically, unless you've written out that you are, giving non-refundable earnest. If you cancel though, typically that goes back. And I know on most new home sales, they typically always take your earnest. It really is dependent on the contract, but even if you get denied, I'm pretty sure that you don't get your earnest money back. So it can be pretty costly. What's the reason that you want to cancel your new construction deal? This is like the third time I've heard it this week. So I'm curious to know like why exactly you're wanting to cancel. All right. Let's go back to email. Okay. So Sarah says, "What is the best home loan for a first-time home buyer? I have about 15,000 saved for down payment. I'm looking for a home in the $400,000 range." There's lots of really good like first time homebuyer programs. And here's what I would always recommend: get a 3% conventional comparison with a 5% conventional comparison, and then also get an FHA comparison. Typically, if you have that much money saved, I wouldn't ask you to go look at down payment assistance because you have to own the home, at least in Arizona, for 3 years, and you're paying a significantly higher interest rate along with paying a higher cost. And so it doesn't really make sense if you have your own down payment, truthfully. So I always recommend that people start off with those. Depending on your credit and your debt to income ratio, you'll really see which loan program is best for your financial situation by doing the side by side comparison. So again, you can do a 3%, a 5%, and a 3.5% because you're a first time homebuyer. All right. Ooh, bad neighbors. Okay. So unfortunately, I don't think that that's a reason to be able to get out of it without a penalty, but you can absolutely cancel. Um, okay. So Nicholas Rodriguez says, I live in Florida and want to become an awesome loan officer like you. That's so nice. Thank you. Do you recommend starting at big banks to get experience, or are there other paths to take? Yeah, so I mean, I always recommend that people start on a team. And I had the benefit. So guys, how I started as the receptionist at a mortgage company and quickly became a dialer, and then I was someone's assistant, and then I was a loan processor. And I never had the benefit of working on like a big team, but I did get a business partner and started my own team. And I really got to learn using her book of business and my company's book of business before I started helping my friends and family out with home loans. And so I think it takes about 200 transactions before you're really proficient in knowing about home loans. There's like 400 rules per agency, so FHA, VA, and both conventionals. And then you have to learn jumbo guidelines. So there's just so much to learn out there. Starting at a big bank is also a really great way to get experience and exposure. So I don't think there is a bad way to do this. But if it was me and you wanted to be a loan officer like me, I'd probably start out working on a team like mine. Um, all right, James, speaking of bad neighbors, is there a way to find out if there are Airbnbs in the neighborhood before you buy one? Yeah, just go to Airbnb and plug in the zip code that you want to purchase, and then it'll take some work, but then you'll Google Maps them to the house that you want to buy. I mean, guys, Airbnbs are kind of everywhere now. Um, I don't know what the future of them is going to be because I know a lot of cities and homeowners are, starting to put together legislation to control it. It is, I mean, especially in areas like ours, I mean, it is contributing to the lack of inventory for people who actually need to live in the property. And you never want an area to be too consumed with investors, but you can look them up and then just do the legwork. All right. So AW says, how did I meet the neighbors before you had the house built? Yeah, I'm so curious, KW. Fill us in more. I'm so curious. All right. Aaron Ford. Hey, dude. Hey, family. Hope you guys are well. Hey, Lizzie. I hope everyone in the process is following her advice. Trust me. Oh, it'll pay off. First time home buyer. Yay, Aaron. Congratulations again on your new home. So proud of you. And thank you so much for tuning into this live chat. Okay, let's see. So James says, I hope they go away. The one next door is awful. You went to check on the slab? And then what? The guys were just like standing out checking their slab? Like, what happened? I'm like, I need more details on this. It's so funny because sometimes these stories are so interesting and you like just want to know. Like I had somebody cancel once because they like rolled up to do their inspection and the neighbors were having a party and they didn't like the type of music that they listened to outside. It was like so silly. So we see it all. Now, obviously, I'm sure these neighbors were terrible, but I'm curious to know more details on this. All right, so let's see here. Okay, Jeannie says, hi, Lizzie. Do you know anything about VA loans? Do I know anything about VA loans? Come on. Um, my brother-in-law bought his home with a VA loan, but he's not a vet. His dad or grandfather was. I do not which remember which was. Is this something you can do if my grandfather was a vet? How do I go about doing it? Thank you so much. So I'm not 100% sure he did a VA loan unless his wife or spouse was a veteran. Um, Typically, that's the only way that I know of that you can use that unless you are a surviving spouse. So there's probably more to that scenario than you are aware of. And maybe he did not get an FA or a VA loan and originally applied for one and bought a house and you thought that. So I'm not 100% sure. Obviously, this is a question that we do get asked a lot. But to my knowledge, in my experience, you cannot get one unless you are a veteran. Okay, let's see. Um, Okay, let's not get crazy here on this live chat, but I love the support everyone's giving. Um, do I think Airbnbs could really go away? So no, I don't think they could go away. I think that they're here to stay, but I do think that they're underregulated. And so, because the hotel industry has a ton of money and way more lobbyists than people that own Airbnbs have, I do think that they're going to, have people taxed and monitored the same way that a hotel would. And I think those additional costs and those additional restrictions are just going to make some people sell or become traditional rentals. And I also think that, as people are going to, as the country opens up more and COVID gets less and less, I think that people will want to stay in resorts again. I don't think that the resort business is out of business. I do think that Airbnbs have changed the game a little bit. But I do think that it does need to be, more regulated. I think homeowners are impacted. I don't think it's fair that somebody can buy like 7 Airbnbs and a first time home buyer has to look at 60 properties because they can't afford to buy something cash. Just my 2 cents on that. Okay. So Kay Jones says they came out and told us they were going to make the backyard party central and their backyard is adjacent to ours. Oh no, that is not great. Um, and that their house just got done 2 weeks ago. Oh no. I mean, do you live in an HOA? Can you already just start reporting them? That's terrible. That is terrible. Seriously, why do people like Airbnbs? It's so awkward. Um, Honestly, I don't know. I personally love like room service and maid service. And I don't like my husband left for the weekend, and this is gonna make me sound so obnoxious, but I was home alone with 3 children, and like one of the nights I stayed at a hotel just because I did not want my house to be dirty. Like, I just had the house cleaners come and I was like, "Oh man, if we stay here, we're gonna trash everything." And I do have little kids, but, yeah, so anyway, I digress. Too much info there. So no HOA on a new build? Really? That's crazy. Um, okay, is now a good time to buy? Selling my starter home, but prices are way up. If your budget's in line and you're going to be in the property, 10 plus years, I think it's a great time to buy. And you're also going to get the highest rate of return for that starter property. So, absolutely, I think it's a great time to reinvest. Oh, hey, Steven. Nice to see you back, honey. Thanks for tuning in. Room service is worth it. I understand. Thanks, man. Appreciate you. I'm glad I'm not feeling judged for that comment. Um, so let's see. I literally just got a text message from Andrea on my team who literally says, "You crack me up." I love you guys. So funny. Alrighty, let's see. Um, let's see here. Okay, what's the best of the two for the long run, FHA or conventional? So this one really just depends on your financial situation. So typically I see people with a 680 or less credit score honestly pay pretty significant amounts less in monthly payment if they go FHA. But the thing is that they end up having to refinance later on the road if they want to take off the mortgage insurance and if they want to reduce their interest rate. And so, unfortunately, there typically always is a refinance in the way, like when you do an FHA loan. Um, but and if you don't have like the right amount of equity and you don't have the right amount of credit score for a conventional loan, it can be kind of costly. And sometimes the restrictions on qualifying prevent people from doing it. But let's say you've got, 720 plus credit score, great debt to income ratio, solid job history. Conventional can be quite a bit cheaper too. So really, honestly, I hate to give this cop out, but it does depend on your actual financial situation, your credit score, your debt to income ratio, which loan's going to be better for you. All right, so let's see. Um, Lizzie, I want to move out of my parents' house eventually. Do you recommend staying away from renting altogether? Do I go straight into buying? Um, I mean, no. I mean, if you've never rented or lived on your own, I mean, just for the sake of like living on your own, I think it's a good idea to rent. It's a good transition period. I honestly, it's hard for me to answer that because I think my personal opinion on like just experiencing life and having less responsibilities, just very strong in that regard. If we're speaking strictly on finances, living with your parents, saving up the most money, getting out of debt, maxing out your retirement makes the most sense. But I literally could not imagine my life without that period of time where I had roommates, had my own apartment, and learned to become like an official adult. So, um, I hope that helps. You are an official adult, by the way. I'm just saying, like, you're still young and have fun. Okay, so Kay Jones says, not kidding. They showed us blueprints of their plans, pool, outdoor bar, and surround sound. I, I mean, I would. Okay, so here's the deal, because it's a new build, honestly, and you probably started building on it a long time ago, I would close on it and see what you could actually sell it for on the open market and see if you could actually get a return. I would actually talk to your real estate agent though, just before you cancel altogether. I have lots of people buying, closing on new builds right now and walking into equity, so you don't want to waste that. Okay, so definitely think about that. Um, all right. So are you seeing more new builds without fences? Seems like a thing out in Buckeye and Wickenburg. Um, no. But I'm not a realtor, so that's probably why. And I don't know that I've paid attention to that, but I will ask my realtor friends. How about that? And I'll get back to you. Liberty returns. I haven't seen you in a while. Nice to have you back on a live chat. So it says, I'm getting a ton more price drop emails from Zillow here in Logan, Utah. And I think we're starting to see that in Arizona too. And it's not because house values are dropping. It's that, a year ago, you could literally list your house for whatever you wanted, and you might have gotten an offer for that. Like, people were paying $70,000, $100,000 over the value of somebody's house just because of how constricted supply was. And now that supply is increasing, and people just can't ask these crazy astronomical prices. So, oh, we got another super chat. Thank you, Miguel Rivera. Thanks for answering all of my questions. You are awesome. Oh my God. Thank you so much. That's so kind. I'm glad and happy to. You're amazing. Thank you so much for the support. Okay, so it says, I should have my own pre-drywall inspection on a DR Horton home. I think you should have all of the inspections that are provided on a new home build, just so you feel comfortable with the way that it's being built. Because of just all of the horror stories and all the media attention on the building restrictions, bad costs, limited labor forces, an under-experienced pool of labor building houses. I mean, I would just want to know that everything is built to last. So yes, go to all the inspections, make sure that your buyer's agents are really, earning their commissions. This stuff's super important, guys. Okay, so it's Daniel says, when it comes to qualifying for a new loan, what's an over leveraged investment property? I'm not sure I understand the question. Can you elaborate a little bit more on? Yeah, I'm not sure what you're meaning. I'm so sorry. Um, and then Kate Jones says, just disappointed. We were excited for the new house. Well, it's a bummer for sure. So, anytime that you buy, but let's say you never had that experience, right? Like, you would have never known, bought the house, moved in, and maybe they really don't have as many parties as you think, or maybe get a white noise machine, or you know dual pane windows or whatever blocks out noise. Maybe it's not as bad as you think. Maybe they make a mean margarita, you guys become friends, you never know. Okay, so Monique Lozano says, I have a crazy horror story. I bought my house almost a year ago, yet to move in. After closing, I found out my house is not livable. What the? The seller was supposed to fix something and never got it fully completed. Monique, we need way more details on that. I'm so, so, so sorry that happened to you. Um, God. Uh, what happened? And then have you talked to a real estate attorney? Is there anything that you can go after them for? Because typically the sellers have to disclose anything that they're aware of on the property. And I can't imagine that you purchased it, closed, and closed on it, and then aren't able to occupy it. And then let's say that it is just some sort of crazy error. Have you also looked into maybe doing like renovation financing where you can actually fix whatever the issue is? I'm so sorry. That makes me so sad for you. Um, ugh, dang girl, I'm so sorry. Okay, so James H says, um, why did Zillow cancel buying homes for the rest of the year? Honestly, I mean, they're an investment company just like any other big business. And honestly, they have a quota for the year of things that they're purchasing, things that they're selling. And so I imagine that they just hit that. I personally haven't read anything about them not buying. So we have to definitely I'll definitely look into that more, but I haven't personally heard that they have stopped buying properties for the rest of the year. I mean, we're still interacting with them on a daily basis, and I know that we got an accepted contract from them today. So I don't 100% know what that's about, but there's a lot of agents that work with Zillow in our area, so I'll definitely be finding out more information on that. Okay, so Mrs. Shelton said, Lizzie, can you explain why you say it's a good time to buy if you plan on living in a house for 10 years? Why 10 years? I bought my house in 2020. Not sure if I will do 10 years here. So in Arizona, real estate has doubled every 10 years. And so that's why I say that. For anyone that's making any kind of money investment, whether it's the stock market or retirement planning or buying a house, it's really hard to predict what will happen in the future. We can only go off of historic metrics. And so, a houses should appreciate 3 to 5%. But the thing is, like, no one could have predicted COVID. Nobody predicted the last Great Recession. And so, because of those things, like to hedge your bet, you want to stay in the property long enough to really like get a return on your investment. So, like, I bought a house in 2006 at the height of the market right before it crashed. And had I owned the property for 10 years, I would have been able to actually finally like break even. I ended up selling it before then, and I ended up losing. And it's always bugged me, and I've always wanted to prevent people from making those mistakes. A lot of people buying today think it's like a quick, easy way to make money, and that's not really what real estate is. It is a place to live. It's a place to deposit in equity, right, in investments, and hopefully get a return on them. But anything can happen, and I'm not a psychic. I'm a fiduciary, so I'm giving you the best financial advice I can. And my thing is that like real estate, like the stock market, like your investments, they're longer term investments. All right. Um Hey guys, so Ale, the girl who just responded, said Lizzie's the best mortgage financial advice. I bought both of my houses with her. So this is true. She was a past client of mine that I hired onto my team. But just fun fact, guys, she literally started my team with me back in 2014. She and Kaden and I got they got the boot because I got the boot. And so she's like my OG OG. I love her so much. So if you ever call my team, chances are you're probably going to be talking to her. Um, and that's Javier right afterwards hating on my live chat. No, just kidding. Guys, he's a super big support. He's the reason I do YouTube at all. He has an amazing channel. I'm sure all of you guys have checked it out, but on the off chance that you haven't, you should definitely check out his channel. He's like a wealth of information, entertaining, smart. I mean, all the things. So thank you for joining us. Um, all right. So Monique gave us some more information on her crazy situation. So she's saying, yes, they kept saying they sold as is, but we clearly stated in our counter offer that certain things had to be fixed, roof being one of them. We obviously didn't know it was this severe, but he was supposed to fix it regardless. So here's the thing. Unfortunately, it's up to the buyer to get all of their inspections done. And this is where representation really matters. Um, it's why sometimes you have to pay extra money to get additional inspections. And so you can do a renovation loan to fix your roof. And I would definitely do that just so that the house can be habitable. But also, this is the type of market where you can sell a house that needs repairs. So, truthfully, if you cannot occupy it, I would put it on the open market and see if you can at least get your money back and maybe make a small return. If not, definitely look into doing any kind of refinance or renovation loan. And then also see if there's any recourse on that agent's E&O insurance for not making sure that, the seller had actually finished their repairs. I mean, there's small claims court, there's attorneys who will file this for you. Just unfortunately, is whenever you get an attorney involved, they do take a percentage of the proceeds, so it might not be enough to just do all the repairs. So definitely look at up all your options. Okay. Will I ask Javier what mortgage means in Latin? Yes, guys. It starts from like mort is like the word for death, right? It's like a life contract or a death contract or something. Um, okay. Oh, honey. So well, good. The thing is that it sounds like you already got legal counsel involved. I'm super sorry that this happened to you again. Bummer, honey. Alrighty, guys. Well, we reached an hour. I appreciate you guys so much for tuning in. This means a ton to me. And it wasn't actually that hard to do it at 4. So if this is a good time that works for you guys, let me know. And we can definitely see about mixing it up and having some of these earlier on in the day. So I appreciate you guys so much for tuning in. Don't forget to like and subscribe to the channel. Your support means the world to me. And we'll be back next week with another Mortgage Live and a money tip video.